S&P 500 was down 1.56% today. It was up in the morning, then was down in the afternoon. Nasdaq was down 1.24% today. It was up in the morning, and it went down in the afternoon. Why? And Dow Jones was up in the morning and also went down in the afternoon, 1.81% on January 18. If stock market go down, everyone could lose money, right? I made $600 in one day on January 18 while stock markets were down. On January 17, I made $800 in one day. So it really doesn't matter if the stock market go down, if the stock markets go up. You should be able to make money in stock markets. Over 2 days, I made 1,475. Short-term gain 1,822. And long-term gain 346 negative. So if you combine these two, I made 1,475 in 2 days. I made over $800 in one day trading stock options. Today I'm going to talk about my one call option trade in January 2023 and why stock market dropped when they should go up. What is my call option trade in January 2023? I traded Enphase call options, strike price 260, expired on February 24. So when I traded, it was only $21. Within 1 hour, it jumped to 23.75. So basically, it was 13.1% gain in 1 hour. So what does it mean? If you invested $1,000, you could have made $131 in 1 hour. If you invested $2,000, you could have made $262 in 1 hour. How much do you have to pay to get this call option? One call option represents 100 shares. So you need to pay $2,100 to get one call option. Why could call option be better than buying 100 shares of Enphase? If you buy 100 shares of Enphase, you could be paying a lot more. But if you just buy one call options, you pay a lot less and also you get exposure to movement of 100 shares. So if share price move a little bit, call options gonna move a lot. So just be careful, because if the share price drop a little bit, your call option could lose a lot of value as well. Why did the stock market drop when they should go up? US retail sales fell 1.1% in December. This is good news. Why? Because if retail sales are falling, inflations are not going to go up that much and inflation could go down. And that's good news because the Federal Reserve is going to look at the data. Hey, economy is not doing as well as we thought. So we could pause the interest rate high. Possibly we could decrease the interest rate high in future. So that's going to be good news. And let's look at the retail sales. Purchases at stores, restaurants and online declined and seasonally adjusted 1.1% in December from November. And if you look at the chart, December fell over 1% and November was falling 0.99%. So this is really good news. So why did the stock market drop even with the good news? Because Fed policymakers call for further rate hikes to beat inflation. And Federal Reserve policymakers on Wednesday signaled they will push on more interest rate hikes, with supporting at least 5%, even as inflation shows signs of having peaked and economic activity is slowing. So everybody was expecting, hey, retail sales were down, so this is good news because Federal Reserve is gonna think that inflation is falling, so we don't need to increase interest rate anymore. But Federal Reserve came out and say, hey, our policies are working, so we're gonna increase much more, up to 5%. So that's why stock market went down. Expectations and reality are different. So whenever the expectations and reality are different, you could see stock market go up or move down, either way. So how can you make money in any stock market condition, whether stock market go up or whether stock market go down? I made $800 in one day when stock market was up on January 17. I made over $600 in one day when the stock market was down. In 2 days, I made over 1,400. So how could I make money even when the stock market was down or even when the stock market was up? It really doesn't matter how to profit in any stock market conditions. I started with stock investing, then put options, and also call options. If you see, my profits came from all three of them: stock investing, put options, and also call options, and also advanced options. So you can use advanced options to multiply your profits. Of course, you need to be really careful when you use advanced options, but advanced options have a higher chance of profitability in my opinions. So use call options, put options, and stock investing, everything. So that's how I got 1,400 profits in 2 days. How to buy call options for beginners? You go to your stockbroker or option broker, you look for the stocks that you want to trade. In this example, I type in BAC, then you're gonna see Bank of America, then go to the right, trade BAC options, click on it. So you will see buy, sell, call, put options. So I chose call, buy, that this is the expiry date. You will see some of the stocks have every month expiry date. This stock has every week expiry date because it depends on how many people want to trade these options. So I can choose February 17 as an example. This is the share price. On the right side, you will see the premium that you have to pay to buy these call options. The lower you go, the higher the premium. The higher you go, the lower premiums. It's because of the strike price. So for call options, the share price is right now $34. If you go down below 34.47, it's called in the money. So what does strike price of $33 means? If you buy call options at the strike price of $33, you can buy 100 shares of Bank of America at $33 per share. Right now, the share price is $34.47. So that means that if you buy $33 and you sell it at the stock market, open marketplace, so you make profits. So that's why you have to pay more premium to buy in the money call options. But if you buy $37 strike price of the money, so you only pay 0.23. You need to multiply it by 100. So you need to pay $23 compared to $212 at the strike price of 33. So what is the difference? Let's say you have $37 strike price BAC call options. You are not going to exercise this call option to get 100 shares of BAC at $37 because right now the market price is only $34.47. So it doesn't make sense for you to buy 100 shares of BAC at $37. So that's why the premium is so low for that. And also the option seller has to have 100 shares in ready when you exercise the call options at any time. So that's why you need to pay higher price to get 33 strike price. To buy this call option, you can click here or you can click on the plus sign. So it really doesn't matter. Either way is gonna be fine. So click on it. On right side, you will see 33 strike call, expiry date February 17, and buy. And remember, the closer you are to the expiry date, the cheaper the premium becomes. And you don't want to wait until the last minute to sell your call options if you're making profits. Even if you're making a loss, do not wait until the last expiry date to sell your call because you want to keep as much as possible even if you are making a loss. So do not get closer to the expiry date. So possibly do it 2 weeks before, 1 month before the expiry date. Click continue One options represent 100 shares. So if you want to buy one options, click 1. Then you can pay for 2.12. So us 2.12 means the lowest price the sellers are willing to accept. So 2.12. The bid price means the highest price the buyers are willing to pay, 2.08. If you want to bargain a little bit, you can possibly put 2.10. And if you want to bargain a little bit more, 2.09. Of course, if you put a 2.08, you might need to wait a long time to get your order fulfilled. But if you want to buy this call option right away, you can put 2.12. So your orders could get filled right away. You will see review order here. So maximum cost that you are going to pay is $212. That's the maximum that you are going to lose. Now you know how much you can lose. So how much can you make at expiry date? And if you go to the right side, this gonna shows the expected profit and loss chart at the expiry date. So if BAC is at say 35.44 at expiry date, you could make $31.91. It's right here. So if BAC is at say $35.78, your profit could be $66.39. But if you go higher and higher, your expected profits is getting bigger and bigger. So if the stock price jump to $36, your expected profit is $92. So basically $100 at $36.13. If you look at it, the chart, your maximum profit is unlimited because the stock price can go up to $100, $200, $300. So that's why the BAC price at expiry, if the price jumps to unlimited, your profit is unlimited. So you're risking $212 to get unlimited profit. So but your break-even point is the stock price has to rise at $35.12 to get break-even. So this is your break-even point. So $35.12. And how much can you lose if the stock price becomes zero? If you go down zero, the most you can lose is $212. That's why this loss is capped at $212. So basically, once BAC stock price reaches $33 at expiry date, you will have lost maximum investment. So that's why do not lose maximum principal. It's really important to cut loss quickly, and it's also important to take profit if you are profitable, because you don't want the stock price to go down once you become profitable. So if you want to buy these call options, click on review order. You are paying $212 for the right to buy 100 shares at BAC for $33 per share by February 17. February 17 is the expiry date. So technically you can exercise your call option to buy 100 shares at any time before February 17. If BAC shares are 33 or higher on February 17, this option will expire worthless. So basically your option is going to become zero. And most people do not exercise to buy shares because you can literally go to the stock market to buy 100 shares at any time. So you don't need to bother to pay premium for the call options to buy 100 shares. We buy call options because we want to trade. We want to get more return on the stock price going up fast and going up a lot. So your stock price has to go up a lot very fast before expiry date to make money with the call options. I hope you enjoyed this video. Comment down below if you have any questions. Like, share, subscribe. Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now. If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist. Stock investing, stock trading, option trading, real estate, cryptocurrency.